Today, members of the Federal Reserve begin their meeting to decide interest rate cuts, on if they should make interest rate cuts, with renewed pressure from President Trump. The president posting on social media this message to Fed Chair Jerome Powell, quote, "Too late, must cut interest rates now, and bigger than he had in mind, housing will soar." Bunch of exclamation marks there. Joining us now is senior markets reporter for Axios, Madison Mills, who I was saying during the break has the best name in the business. Madison, great to have you in our new home this morning. Thanks for being with us. This meeting comes after a number of red flag warnings in the economy. So help us understand what those warnings are and how it will shape this decision.
That's exactly right. We just had a jobs number revision indicating that over the last 12 months, about 1 million fewer jobs were added to the economy than we initially thought, which is just a massive difference in how you view the strength of our labor market. And then at the same time, you have inflation ticking up. And this is what the Federal Reserve has been sort of fighting against since the pandemic and since we saw these supply chain shocks leading to record high price increases. They were starting to make some progress to that end. Inflation was coming down, but then you had these tariffs put in place, and we are starting to see evidence that tariffs are fueling inflation. That presents a really difficult dynamic for the Federal Reserve because propping up the labor market and fighting inflation, those are two different things in terms of the treatment from the Fed. One requires cuts, one requires higher interest rates. So that's where the dynamic is.
And each of those decisions carries with it some type of unique consequence. So if the Fed does decide to cut rates, as is an expectation, what would that mean for our viewers in the next few months, this fall, for example?
Well, it's really interesting to hear the president saying that housing will soar off the back of rate cuts. That really depends on the bond market, because if bond investors push up something like the 10-year yield, that's what's tied to your mortgage rates, your credit card rates, right? So it really depends on how Wall Street responds to the Federal Reserve's interest rate that is really tied to very short-term rates versus those long-term rates. So it's not necessarily the case that if we get a 25 basis point cut, suddenly mortgage rates are going to drop. That relationship is a little bit more complex.
Right. It's also important to remember how it's not a direct, as you just laid out, not a direct connection to the rates we pay, but it's all kind of in the same financial pot in a way. Is the committee likely to even be united on any decision? And if not, what does that mean?
Right. Of course not these days, right? You have, as I laid out, all of this economic data is creating this very confusing soup for the Federal Reserve because it's so mixed, and we're having such a divergent economy right now, especially from low income to higher income consumers. Right. Depending on what data you look at, you can get a totally different picture of the economy. And then this meeting is going to be really interesting because Stephen Murin, Trump's economic advisor, is set to attend the meeting after getting confirmed late last night. So we're certainly expecting to have a mixed Federal Reserve in terms of their votes on where interest rates should be set going forward.
All right. Madison Mills, always great to have you here. Come back anytime. All right. You've broken the set in, so you're welcome back. Open invitation. Good to see you.